Welcome to our series exploring the profound impact of digital technology on the world of U.S. taxes. For generations, the process of filing taxes was a distinctly physical, and often stressful, annual ritual. Many of us can recall, or have heard stories of, the kitchen table buried under a mountain of paper forms, the frantic search for misplaced receipts in a shoebox, and the slow, methodical calculations done by hand or with a simple calculator. The final step was a trip to the post office, a stamped envelope carrying weeks of financial accounting, sent off with the hope that everything was correct. That world, for millions of Americans, is now a distant memory. Today we live in an era of digital transformation, and the tax landscape has been reshaped right along with it. This series is designed for informational and educational purposes only. The content provided is a general overview of industry trends and technological changes. It is not intended to be, and should not be construed as financial, investment, legal, or tax advice. Tax laws are complex and subject to change, and individual circumstances vary greatly. For advice specific to your situation, it is essential to consult with a qualified and licensed professional, such as a certified public accountant or a tax attorney. Our goal here is not to tell you how to manage your taxes, but to explore the powerful tools and systems that are fundamentally changing the process for everyone. The shift from paper to pixel did not happen overnight. It was a gradual evolution, beginning with the advent of the personal computer. Early tax preparation software, introduced in the 1980s and becoming mainstream in the 1990s, was a revolutionary concept. For the first time, individuals could use a guided, interview-style program on their home computer to navigate the complexities of tax forms. This software performed the calculations automatically, minimizing arithmetic errors that were once a common pitfall of paper filing. It was a pivotal moment that empowered everyday taxpayers, giving them a level of control and understanding they had never experienced before. This initial wave of innovation was supercharged by the rise of the Internet. The introduction of the IRS e-file system marked the next great leap forward. Suddenly, the process of submitting a tax return was reduced from days in the mail to a matter of seconds. E-filing offered speed, confirmation of receipt from the IRS, and most importantly, faster refunds. The convenience was undeniable, and taxpayer adoption grew exponentially year after year. This mass adoption of e-filing laid the groundwork for the deeply integrated digital ecosystem we see today. It signaled a permanent shift in how taxpayers and the government interact. But what are the primary forces driving this ongoing digital revolution in the tax world? First and foremost is the universal demand for efficiency and convenience. In a world where we can manage our banking, shopping, and communication from a device in our pocket, the expectation is that filing taxes should be just as seamless. Technology developers have responded to this demand with a host of sophisticated tools that go far beyond simple form filling. Second, the Internal Revenue Service itself has been a significant catalyst for change. Facing budget constraints and an enormous volume of returns to process, the IRS has increasingly embraced technology to streamline its own operations. By encouraging electronic filing and creating digital portals for taxpayers, the agency can process returns more efficiently, reduce errors, and improve compliance. Initiatives like the IRS Online Account, where taxpayers can view their payment history, access their records, and manage payment plans, are clear indicators of this strategic direction. Finally, the very nature of our economy has become more digital, creating new challenges that demand digital solutions. The rise of the gig economy, the growth of e-commerce, and the emergence of digital assets like cryptocurrency have introduced new streams of income and complex transaction types that don't fit neatly into the old paper-based system. Digital tools are not just a convenience in this new economy. They are a necessity for accurate tracking and reporting. As we move forward in this series, we will dissect the specific tools that are defining this new era. We'll examine how modern tax software leverages cloud computing and data analytics. We will explore the growing role of artificial intelligence and machine learning in identifying deductions and ensuring accuracy. We will also delve into the specialized apps designed for freelancers and small business owners, the challenges posed by taxing digital assets, and the critical issues of data security and privacy in an increasingly connected world. The transition from the paper-filled past to the digital present is more than just a change in method. It represents a fundamental shift in the relationship between citizens and their tax obligations. It has democratized access to tax preparation, created new industries, and presented new questions for regulators to answer. The shoebox of receipts may be replaced by a folder of digital files in the cloud, but the core responsibility of filing an accurate tax return remains. The story we will tell is how technology is changing the way we meet that responsibility. In our opening chapter, we journeyed back to the era of paper forms and shoeboxes, establishing a baseline for just how dramatically the tax preparation process has changed. We touched on the dawn of tax software as the first major disruption to that age-old system. Now, in this chapter, we will take a deeper dive into the remarkable evolution of that software itself. The story of tax software is a journey from a static, isolated program on a single computer to a dynamic, interconnected service that lives in the cloud, accessible from anywhere, at any time. The first generation of tax software was a revolution in a box. In the 1990s and early 2000s, taxpayers would purchase a CD-ROM or download a file to install a program directly onto their desktop or laptop computer. The core value of these programs was transformative. They provided a guided, interview-style format that translated the complex, often intimidating language of tax forms into a series of straightforward questions. Did you earn any income from wages? Did you pay any student loan interest? This question-and-answer process was a revelation, making tax preparation accessible to millions who had previously relied on professional preparers or braved the paper forms alone. Crucially, these programs automated all the mathematical calculations, significantly reducing the risk of simple arithmetic errors that could delay a refund or trigger a notice from the IRS. However, this desktop era had its limitations. The software was tethered to a single machine, making collaboration between spouses or sharing information with a professional cumbersome. Data entry was still a largely manual process, and tax law updates required users to download and install patches. The next great leap forward was the migration from the desktop to the cloud. This wasn't just a change in how the software was delivered, it was a fundamental shift in how it functioned. Instead of a program installed on your computer, cloud-based software runs on secure, remote servers and is accessed through a web browser or a dedicated application. This software as a service model eliminated the need for installations and manual updates. Tax law changes, form updates, and new features became seamless and automatic, always available to the user upon logging in. The most significant advantage of this move to the cloud was accessibility. A tax return could be started on a work computer during a lunch break, continued on a home laptop in the evening, and reviewed on a tablet over the weekend. The data was no longer trapped on one device. It was securely stored and accessible from any internet-connected device. This flexibility perfectly matched the increasingly mobile lifestyle of the modern American. Furthermore, cloud computing opened the door to powerful data integration. This is perhaps one of the most impactful developments in the history of tax preparation. Instead of manually typing in every number from a W-2 or a 1099 form, modern software can often import this data directly from payroll providers, banks, and investment firms. With the taxpayer's permission, the software securely connects to these financial institutions and pulls in the necessary figures. This automation not only saves a tremendous amount of time, but also dramatically increases accuracy by removing the potential for data entry errors. As smartphones became the central hub of our digital lives, tax software naturally followed. The development of sophisticated mobile apps brought tax preparation to the palm of our hands. These apps are often designed for taxpayers with less complex financial situations and focus on a streamlined, mobile-first experience. A standout feature of many of these apps is the ability to use the phone's camera to snap a picture of a tax document, like a W-2. The app then uses optical character recognition, or OCR technology, to read the document and automatically populate the relevant fields in the tax return. This capability has further lowered the barrier to entry, making the filing process faster and more intuitive than ever before. This evolution is about more than just filing a return once a year. Modern digital tools are creating a fully integrated financial ecosystem. Accounting software used by small businesses, expense tracking apps for freelancers, and even personal budgeting tools can now sync with tax platforms. This allows for a continuous, year-round approach to tax planning. A freelance graphic designer can now photograph a receipt for a business lunch, and their app can automatically categorize it as a potential business expense that will flow into their tax software at the end of the year. This transforms tax preparation from a reactive, once-a-year scramble to a proactive, ongoing process of organization. While these tools provide powerful assistance and automation, it is important to remember that the ultimate responsibility for the accuracy of a tax return always lies with the individual taxpayer. These platforms are incredible aids for organization, calculation, and filing, but they are not a substitute for understanding one's own financial situation or for seeking professional judgment in complex scenarios. From a program on a disk to an intelligent, cloud-based service connected to our entire financial lives, the evolution of tax software has been nothing short of astonishing. It has empowered individuals, increased efficiency, and fundamentally reshaped the tax preparation industry. But the technology continues to advance. In our next chapter, we will look under the hood at the intelligence that is now driving these modern platforms. The growing role of artificial intelligence and machine learning in the world of taxes. In our previous chapter, we traced the journey of tax software from the desktop to the cloud, highlighting the incredible gains in convenience and data integration. Now we venture a layer deeper, beyond the user interface, to explore the engine that is beginning to power the next generation of tax tools. Artificial intelligence, or AI, and its counterpart, machine learning. These terms may sound like science fiction, but they represent a very real and powerful shift, moving tax preparation from a process of guided data entry to one of intelligent data analysis and interpretation. First, let's demystify these concepts. At its core, AI in the context of taxes refers to systems designed to perform tasks that typically require human intelligence. This could be recognizing information on a document or identifying patterns in financial data. Machine learning is a subset of AI. It is the process by which these systems learn and improve from data, without being explicitly programmed for every scenario. Instead of following a rigid set of if-then rules, a machine learning model can analyze millions of data points to identify relationships and make predictions. This ability to learn is what makes AI so transformative in the tax world. For the individual taxpayer using modern software, the influence of AI is often subtle but powerful. One of the most common applications is in data capture. When you snap a picture of a W-2 form with your smartphone and the app instantly populates the correct fields, you are witnessing a form of AI called optical character recognition, or OCR, at work. More advanced systems are now using machine learning to not just read, but also understand and categorize financial transactions. For example, by connecting to a user's bank or credit card data, an AI-powered system can analyze a year's worth of transactions and suggest potential categorizations. It might recognize a payment to an office supply store and flag it for the user to review as a possible business expense. This moves beyond simple automation. It's an act of analytical assistance. Another key application is in error and anomaly detection. Machine learning models can be trained on vast datasets of anonymized tax returns. This allows them to learn what a normal return looks like for someone in a given financial situation. The software can then gently flag entries that seem unusual or inconsistent with the user's past filings. For example, if a user's reported charitable donations are drastically different from previous years, or if a specific deduction seems abnormally high, the system might prompt the user to double-check their entry. This serves as an intelligent proofreading tool, helping to catch potential mistakes before the return is ever filed. It is critical to understand that these AI tools are designed to be assistants, not decision-makers. They make suggestions and flag potential issues for human review. The final authority and responsibility for the accuracy of every number and every claim on a tax return remains squarely with the taxpayer. The impact of AI extends beyond just individual preparation. It is also becoming an indispensable tool for the Internal Revenue Service. The IRS is tasked with processing hundreds of millions of returns and ensuring the integrity of the nation's tax system. With the immense volume of data involved, AI and machine learning are uniquely suited to this challenge. The agency is increasingly using sophisticated algorithms to analyze returns on a macro scale, identifying patterns that may indicate emerging tax evasion schemes or large-scale fraud. This technology allows the IRS to select returns for audit with much greater precision. Instead of random selections, AI models can analyze a multitude of risk factors to identify returns that have the highest probability of non-compliance. According to the IRS, this technology is being focused on complex compliance areas, such as large corporate and partnership returns where sophisticated financial structures can obscure taxable income. By using AI to pinpoint these high-risk areas, the agency aims to enforce tax law more effectively and avoid unnecessarily burdening compliant taxpayers with audits that result in no change. In essence, artificial intelligence is creating a more data-driven and analytical tax ecosystem for everyone involved. For taxpayers, it promises a smarter, more intuitive preparation process with built-in checks to help reduce errors. For the government, it offers a powerful new capability to uphold tax law and ensure fairness in the system. As this technology continues to mature, its integration will only become deeper. In our next chapter, we will shift our focus from the software used to prepare taxes to the digital tools provided by the government itself. We will explore how taxpayers can now interact directly with the IRS through online portals and new filing initiatives, changing the very nature of the relationship between the citizen and the tax authority. In our journey so far, we have explored the evolution of commercial tax software and the rise of artificial intelligence in tax preparation. Now we turn our attention to a critical and rapidly changing part of the digital tax ecosystem: the tools and services provided directly by the Internal Revenue Service. For decades, direct interaction with the IRS was often limited to paper correspondence or long waits on telephone hold. Today, the agency is undergoing a significant modernization effort, building a suite of digital tools that aim to give taxpayers more direct control over and insight into their own tax information. As with all topics in this series, this chapter is for informational purposes only. It is intended to describe the digital services the IRS makes available to the public. This overview does not constitute tax or legal advice, and it is not an endorsement or instruction on the use of these services. For guidance on your specific tax situation, consulting with a qualified tax professional is always the recommended course of action. The centerpiece of the IRS's digital taxpayer service is the individual online account. This is a secure, password-protected portal that allows taxpayers to access their personal tax information 24 hours a day. Through this account, an individual can perform a number of actions that previously would have required a formal request by mail or phone. Users can view their balance owed, see their payment history for the past 24 months, and make payments directly from a bank account or by debit or credit card. The portal also provides access to key tax records, such as transcripts, and allows users to view digital copies of certain IRS notices. For those who need to manage a tax liability over time, the online account provides tools to set up or revise payment plans, like installment agreements. This portal represents a fundamental shift towards self-service, empowering taxpayers with direct access to their own data. Perhaps the most talked about recent development is the IRS Direct File program. After a successful pilot during the 2024 filing season, the IRS has announced plans to make Direct File a permanent, free option for filing federal tax returns. This program marks a historic change, as it is a tax preparation and filing tool built and managed by the IRS itself. During its pilot phase, the service was available to taxpayers in a limited number of states with relatively simple tax situations. The system functions much like commercial software, guiding users through an interview-style process to complete their return. The stated goal of the Direct File program is to provide a no-cost option that simplifies the filing process and reduces costs for eligible taxpayers. Its existence provides a government-developed alternative in the tax preparation landscape, a significant development in the U.S. tax system. Beyond these major platforms, the IRS has long offered a range of smaller, specialized digital tools. The Where's My Refund? Tool remains one of the agency's most popular online services, allowing taxpayers to track the status of their refund from receipt to approval and payment. The IRS 2Go mobile app offers a mobile-friendly way to check refund status, make a payment, and find free tax preparation assistance. The agency also provides secure online tools for taxpayers to apply for payment plans or respond to certain notices by uploading documents directly, reducing the reliance on postal mail. Underpinning many of these services is a heightened focus on security and identity verification. To protect sensitive taxpayer information from fraud, accessing services like the individual online account requires a robust identity verification process. This often involves providing personal financial information, or using a third-party identity verification service to confirm that you are who you say you are. While an extra step, this is a critical component of building a safe and trusted digital infrastructure. The motivation behind this extensive digital transformation is twofold. From the taxpayer's perspective, the goal is to improve customer service, reduce wait times, and make it easier and less burdensome to comply with tax obligations. From the agency's perspective, these digital tools are a matter of efficiency. Automating processes, encouraging electronic payments, and providing self-service options reduces the immense cost and labor associated with processing millions of paper documents and answering millions of phone calls. It is a strategic effort to modernize government operations for the 21st century. In our next chapter, we will shift our focus from the tools themselves to a specific segment of the modern workforce that relies heavily on them. We will explore the unique tax challenges and digital solutions for the millions of Americans participating in the gig economy and self-employment. In our previous chapters, we examined the broad evolution of tax tools and government services. Now we narrow our focus to a rapidly growing segment of the American workforce for whom these digital tools are not just a convenience, but a necessity: the millions of individuals participating in the gig economy. This includes freelancers, independent contractors, rideshare drivers, delivery service providers, and online sellers. While this modern way of working offers incredible flexibility, it also carries a set of tax responsibilities that are fundamentally different from those of a traditional employee. This chapter will provide a general overview of these responsibilities and the digital solutions designed to help manage them. The information is for educational context only and is not tax advice. The world of self-employment tax is complex, and individuals should always consult with a qualified tax professional to understand their specific obligations. The primary distinction for a self-employed individual is the absence of tax withholding. A traditional employee, who receives a Form W-2, has their income, Social Security, and Medicare taxes automatically deducted from each paycheck and remitted to the government by their employer. A gig worker or freelancer, however, is generally treated as an independent business owner. The companies that pay them for their services typically do not withhold any taxes. This places the entire responsibility of calculating and paying those taxes squarely on the individual. This responsibility creates several key challenges. The first is income tracking. A freelancer may receive payments from dozens of clients throughout the year. A rideshare driver might earn income from multiple platforms. This income is often reported on various forms, such as a Form 1099 NEC for direct non-employee compensation, or a Form 1099-K for payments processed through a third-party network like PayPal or a credit card processor. It is up to the individual to aggregate all this income from every source, whether a form is issued or not. The second, and equally important, challenge is expense tracking. Because they are considered business owners, the self-employed can often deduct ordinary and necessary business expenses from their income, which lowers their overall tax liability. This could include vehicle mileage, supplies, software subscriptions, or a portion of home office costs. However, the burden of proof lies with the individual. Every potential deduction must be meticulously documented with receipts and records. This is the modern-day shoebox of receipts problem, and failure to keep adequate records can result in lost deductions. Finally, there is the matter of paying the taxes themselves. To avoid a large bill and potential penalties at the end of the year, the self-employed are generally required to pay estimated taxes in 4 quarterly installments throughout the year. This involves projecting one's annual income and tax liability in advance. They must also account for the self-employment tax, which covers their Social Security and Medicare contributions. Essentially, both the employee and employer portion of these taxes. To meet these significant record-keeping demands, an entire ecosystem of specialized digital tools has emerged. Mileage tracking applications, for instance, use a smartphone's GPS to automatically log miles driven for business. Users can then classify each trip as business or personal with a simple swipe, creating a detailed, compliant mileage log. Expense management apps have also become indispensable. These tools allow a user to simply take a picture of a receipt with their phone. The app then uses OCR technology to digitize the vendor, date, and amount, and allows the user to categorize the expense. Many of these apps can also link directly to bank and credit card accounts, automatically importing transactions, and using AI to suggest potential business expense categorizations for the user to review. For a more holistic solution, many freelancers turn to cloud-based accounting software designed for sole proprietors. These platforms often combine income and expense tracking, invoicing capabilities, financial reporting, and tools that help estimate quarterly tax payments based on the financial data entered. They provide a central dashboard for the financial health of the business. The largest gig economy platforms have also begun offering their own digital assistants, providing users with annual income summaries and partnering with tax software companies to streamline the reporting process. These digital tools have become a foundational part of succeeding in the gig economy. They bring a level of organization and efficiency to the complex financial lives of the self-employed that was once only possible with dedicated bookkeeping staff. In our next chapter, we will move from the new world of work to the new world of finance, as we explore one of the most complex and rapidly evolving areas of taxation: the challenges posed by digital dollars and cryptocurrency. Welcome back. In our last chapter, we explored the tax landscape for the modern gig economy. Now we venture into an even newer and more complex financial frontier: the world of cryptocurrency and digital assets. Bitcoin, Ethereum, NFTs, and thousands of other digital tokens have emerged as a new asset class, creating immense technological innovation. However, their unique nature presents a significant challenge for a tax system that was designed long before their existence. This chapter is for informational purposes only, and is intended to provide a general overview of how the U.S. tax system currently treats digital assets. This is one of the most complex and evolving areas of tax law. The content is not, and should not be considered, investment, financial, or tax advice. Anyone involved with digital assets should strongly consider consulting with a qualified professional who specializes in this specific area. The single most important concept to understand is that for U.S. federal tax purposes, the IRS treats virtual currency as property, not as currency. This seemingly simple classification has profound consequences. It means that engaging with cryptocurrency is often treated like a transaction involving a stock or a piece of real estate. Anytime a digital asset is sold, exchanged, or used, it can trigger what is known as a taxable event, potentially resulting in a capital gain or a capital loss. Let's describe some common taxable events. When a person sells cryptocurrency for US dollars, that is a taxable event. When they trade one type of cryptocurrency for another, for instance, trading Bitcoin for Ethereum, that is also a taxable event. Perhaps most surprisingly for newcomers, using cryptocurrency to purchase goods or services is a taxable event. From a tax perspective, buying a cup of coffee with a digital asset is treated as if you first sold that small fraction of the asset for dollars, and then used those dollars to buy the coffee. For each of these events, a capital gain or loss must be calculated. This is the difference between the asset's value in US dollars when it was disposed of, and its value when it was originally acquired, which is known as its cost basis. This leads to an immense record-keeping challenge. An active user might have hundreds or even thousands of taxable events in a single year, each requiring its own calculation. The complexity is magnified by a few key factors. First is tracking the cost basis. Every purchase of a cryptocurrency, no matter how small, establishes a cost basis for that specific amount. If someone buys the same crypto at different times and prices, they have multiple cost bases to track. Second is the sheer volume of transactions. Unlike stock trading, which often involves a handful of trades, crypto trading can involve a high frequency of transactions across multiple exchanges and personal digital wallets. Finally, data aggregation is a major hurdle. Information is often scattered, requiring a user to pull records from numerous sources to get a complete picture. In response to this significant complexity, a specialized category of digital tools has been created: cryptocurrency tax software. These platforms are designed specifically to address the record-keeping nightmare of digital assets. They function by connecting directly to major cryptocurrency exchanges and, in some cases, public blockchain addresses. Using secure connections known as APIs, this software can automatically import a user's entire transaction history. Once the data is aggregated, the software gets to work. Its primary function is to match sales and other disposals with the original acquisitions, a process that allows it to accurately calculate the cost basis for each transaction. It then computes the resulting capital gain or loss for every single taxable event throughout the year. The final output of this software is typically a detailed report or a completed tax form, most commonly Form 8949, which is used to report capital gains and losses. This report can then be imported into traditional tax preparation software, or provided to a tax professional. The growing importance of this area is evident on the front page of the main U.S. tax return, Form 1040. There is now a prominent question that every single taxpayer must answer, asking whether they engaged in any transactions involving digital assets during the year. This signals a clear focus from the IRS on improving compliance in this area. As we look ahead, this space will only continue to evolve with new regulations and technologies. In our next chapter, we will address a topic that is critical to every digital interaction we've discussed so far: the crucial issues of privacy and data security in the digital tax age. In our journey through the new landscape of U.S. taxes, we have seen how digital tools have brought unprecedented convenience and power to our fingertips. From cloud-based software and AI-driven analysis to government portals and complex cryptocurrency trackers, every innovation shares one common element: data. To function, these systems require access to the most sensitive personal and financial information an individual possesses.
Disclaimer: this video is for informational and educational purposes only and should not be considered professional legal, financial, or tax advice. I am not a certified public accountant, CPA, or a tax attorney. You should consult with a qualified professional for advice tailored to your individual situation. Tax laws are complex and subject to change. The creator of this video, or the channel will not be held liable for any actions taken based on the information provided.
This reality brings a crucial topic to the forefront: the privacy and security of that data. This chapter will provide an educational overview of the security measures in place to protect taxpayer information and the common threats that the industry, government, and public face. The information provided here is for general knowledge and is not a set of security recommendations. For specific advice on protecting your personal information, it is best to consult resources from established cybersecurity experts and government agencies. The data involved in a tax return is a treasure trove of personal information. It includes not just names and addresses, but also social security numbers for individuals and their dependents, dates of birth, bank account and routing numbers, and a complete financial picture of income, investments, and debts. In the wrong hands, this information is a master key to financial identity theft. Therefore, protecting it is a matter of the highest priority for everyone in the tax ecosystem. The digital nature of modern taxes, while efficient, also creates a landscape of potential threats. One of the most persistent is phishing. These are deceptive emails, text messages, or websites designed to look like they are from a legitimate source, such as the IRS or a major tax software company. They often create a sense of urgency, telling a recipient their account is locked or they are owed a surprise refund, in an attempt to trick the person into revealing their login credentials or other personal data. It's important to note that the IRS has a stated policy of not initiating contact with taxpayers by email, text message, or social media to request personal or financial information. Beyond individual scams, the centralized servers of tax companies and government bodies are high-value targets for sophisticated cyberattacks. A data breach at one of these institutions could potentially expose the information of millions of taxpayers. This threat has driven a massive investment in defensive cybersecurity technologies and practices across the industry. To combat these threats, a multi-layered defense system is employed. The first and most fundamental layer is encryption. In simple terms, encryption is the process of scrambling data so that it can only be read by someone with the correct key. Reputable tax software providers use encryption to protect data both in transit, when it is traveling over the internet from your computer to their servers, and at rest, when it is being stored in their databases. This ensures that even if the data were intercepted, it would be unreadable. Another critical layer of defense that has become standard practice is multi-factor authentication, or MFA. This is a security process that requires more than one method of verification to access an account. It goes beyond just a username and password. Typically, after entering a password, the user is required to provide a second piece of information, such as a temporary code sent to their smartphone. This means that even if a criminal manages to steal a password, they would be unable to access the account without also having physical possession of the user's phone. Recognizing that no single entity can solve this problem alone, the IRS, state tax agencies, and the private sector tax industry have joined forces to create the Security Summit. This collaborative partnership works year-round to coordinate on cybersecurity, develop shared security protocols, and present a united front against tax-related identity theft. Initiatives from the summit have led to the implementation of stronger security standards for all professional tax software, and have enhanced the analytical systems that detect and prevent fraudulent returns from being processed. While technology provides the primary shield, awareness remains a key component of the overall security posture. The entire digital tax ecosystem, from the largest software provider to the individual taxpayer, plays a role in maintaining its integrity. In our next chapter, we will shift our focus from the tools and their security to the human element of the tax world. We will explore how this wave of digital transformation is fundamentally changing the role and responsibilities of the tax professional. Throughout this series, we have focused on the digital tools that empower individual taxpayers. But what about the professionals? The certified public accountants, enrolled agents, and tax preparers who have long guided Americans through the complexities of the tax code. It might be tempting to think that as software becomes smarter, the need for human experts diminishes. The reality, however, is more nuanced. Technology is not replacing the tax professional. Rather, it is profoundly transforming their role, shifting their focus from manual compliance to strategic advisory. As always, this discussion is for educational and informational purposes. It is an observation of trends within the tax preparation industry, and is not intended as a recommendation or endorsement of professional services. The decision of whether to use a tax professional is a personal one, dependent on individual circumstances and complexity. Historically, a significant portion of a tax professional's work was dedicated to manual, time-consuming tasks. A client would arrive with a folder, or even a box, of receipts, statements, and forms. The professional's job was to manually sort, organize, and enter this mountain of data into their specialized software. This process of data entry and basic form filling, while critical, was fundamentally a clerical and computational function. Today, technology has automated much of this foundational work. The rise of cloud accounting software has been a game changer. Small business clients who use these platforms can now grant their tax professional direct access to their financial records. The data is already digital, categorized, and available in real time. For individual clients, secure online portals allow for the easy upload of digital documents, eliminating the need for physical paperwork. This means the professional can spend far less time on data entry and more time on data analysis. This shift moves the professional's value away from simply processing what has already happened and toward interpreting the story the data tells. Instead of just inputting numbers, the modern tax professional can analyze a client's year-round financial activity to identify trends, spot inconsistencies, and provide context. They are no longer just historians of a client's past financial year. They are becoming active participants in their client's ongoing financial health. This evolution is powered by a new generation of professional-grade digital tools. Tax professionals now work from sophisticated, cloud-based software suites that act as a central command center for their entire client base. From a single dashboard, they can manage client information, track filing deadlines, and collaborate with both clients and team members securely. Artificial intelligence is also entering the professional's toolkit. AI-powered software can scan vast amounts of financial data to flag potential audit risks or identify anomalies that a human might miss, allowing the professional to ask more targeted and insightful questions. Consequently, the nature of the client relationship is changing. The once-a-year meeting during tax season is being replaced by a more continuous, year-round advisory role. With access to real-time financial data, a professional can offer proactive guidance on the tax implications of business decisions, retirement planning, or major life events as they happen, not just a year later when the forms are being filed. While technology excels at handling routine and data-heavy tasks, the need for human expertise becomes more critical as financial complexity increases. Interpreting ambiguous areas of the tax code, structuring a new business, planning an estate, or representing a client in a dispute with the IRS are all areas that require nuanced judgment, strategic thinking, and deep experience, qualities that software cannot replicate. Technology empowers the professional by handling the administrative burden, freeing them to focus on these high-value, uniquely human skills. In essence, the tax professional of the future is less of a calculator and more of a strategist. They are a collaborative partner who leverages technology to provide deeper insights and more forward-looking advice. In our next chapter, we will look at this digital transformation from the client's perspective, focusing specifically on how these tools are reshaping tax management and planning for small businesses. Small businesses are often called the engine of the U.S. economy, a diverse and dynamic group ranging from local retail shops to innovative tech startups. While they are celebrated for their agility and entrepreneurial spirit, small business owners also face a disproportionately large administrative burden, especially when it comes to tax compliance. In this chapter, we will explore the unique tax challenges that small businesses face and examine how a new generation of integrated digital tools is helping them navigate this complex terrain. This overview is for educational purposes, designed to illustrate the operational challenges and technological solutions prevalent in the small business sector. It is not business, financial, or tax advice. The specific needs and obligations of any business depend on its structure, industry, and location, making consultation with legal and accounting professionals essential. For a small business, tax compliance extends far beyond a single annual income tax return. It is a continuous, year-round responsibility with multiple moving parts. At the most basic level is bookkeeping, the meticulous process of recording every single financial transaction, from a major sale down to a box of paper clips. Without accurate books, a business cannot have a clear picture of its financial health, nor can it file an accurate tax return. One of the most complex areas is payroll tax. When a business hires employees, it becomes responsible for calculating, withholding, and remitting a variety of taxes on their behalf. This includes federal income tax, Social Security and Medicare taxes, and federal unemployment tax. Furthermore, each state has its own set of rules for state income tax, withholding, and unemployment insurance. The process involves precise calculations, timely payments to multiple government agencies, and the filing of regular reports, making it a significant administrative challenge. For businesses that sell goods or certain services, there is also the hurdle of sales tax. The United States does not have a national sales tax. Instead, it is a complicated patchwork of rules set at the state, county, and even city level. A business must determine where it has an obligation to collect tax, charge the correct rate for every transaction based on the customer's location, collect that tax, and then remit it to the appropriate jurisdiction, each with its own forms and deadlines. To manage these multifaceted demands, digital tools have become indispensable. The central hub for most modern small businesses is cloud accounting software. This software acts as the financial nervous system of the company. A key feature is direct integration with the business's bank and credit card accounts. This bank feed automatically imports all transactions, dramatically reducing manual data entry and providing an up-to-date view of cash flow. Within the platform, business owners can categorize expenses, attach digital receipts, and generate critical financial reports like a profit and loss statement with just a few clicks. To handle the complexities of payroll, many businesses now rely on dedicated digital payroll platforms. These services automate the entire payroll process. They calculate each employee's gross pay, deductions, and withholdings, handle direct deposits into employee bank accounts, and most importantly, they manage the filing of payroll tax returns and the remittance of taxes to the correct federal and state agencies. This automation helps ensure compliance in a highly regulated area. Similarly, sales tax automation software has emerged to tackle the challenge of multi-jurisdictional sales, particularly for e-commerce businesses. These tools can integrate directly with a company's online store. At the point of sale, the software instantly determines the correct sales tax rate based on the customer's exact address and the specific product being sold. The system then compiles the collected taxes and can automate the process of filing returns in the various states where the business operates. By integrating these specialized tools, a small business can create a highly efficient, interconnected financial system. This digital transformation does more than just simplify tax compliance. It provides business owners with real-time, actionable data about their financial performance, empowering them to make smarter, more informed decisions. In our next chapter, we will look to the horizon and explore what the future of taxation might hold, examining emerging concepts like real-time tax collection and the potential use of AI in government audits. In our journey so far, we have charted the digital revolution that has already transformed the U.S. tax system. We've moved from paper forms to cloud software, and from manual calculations to AI-assisted analysis. Yet for all this progress, our system remains fundamentally retrospective. We spend the beginning of each year looking backward, documenting and settling our obligations for the year that has already passed. In this chapter, we will look to the horizon and explore the concepts that could define the next era of taxation: real-time reporting and AI-powered tax administration. This discussion is an exploration of emerging ideas and global trends. The concepts presented are not currently implemented in the U.S. individual tax system, but are subjects of discussion among technologists, economists, and policymakers. This chapter is for educational context about the future of the field, and is not a prediction or a form of financial advice. The core idea behind real-time taxation is to shift the process of tax calculation and collection much closer to the moment a financial transaction actually occurs. Imagine a world where, instead of aggregating a year's worth of data for a single annual filing, tax obligations are identified and potentially settled on a continuous basis. This is an extension of a principle we are already familiar with: the payroll withholding system for employees. Real-time tax concepts explore how this principle could be applied to a much broader range of economic activities. For example, in a theoretical model, when a small business makes a sale through a digital payment processor, the system could instantly calculate the relevant sales tax and estimated income tax liability for that single transaction. That tax amount could then be automatically set aside or remitted to the tax authorities. For a gig economy worker, the platform they work for could, in theory, calculate and withhold estimated taxes on each payment they receive. The potential appeal of such systems for governments is the prospect of a more stable and predictable revenue stream, and a reduction in the tax gap. The difference between the total taxes owed and the amount that is actually paid on time. While this may sound futuristic, some countries have already implemented foundational elements of such systems, particularly in the realm of business taxes. In parts of Europe and Latin America, for instance, governments have mandated e-invoicing, where businesses must submit all their invoices to the tax authority's digital system in near real time. This gives the government immediate visibility into economic activity, which it can use to verify value-added tax, or VAT reporting. These global examples demonstrate that the technology for more immediate tax data collection is not only possible, but is already in use. The other major component of the future of taxation is the expanding role of artificial intelligence in tax administration. As we discussed earlier, the IRS already uses AI to detect fraud and select audits. In the future, this capability could become far more sophisticated. Experts envision systems where AI could perform a form of continuous, automated audit. Instead of a human auditor reviewing a taxpayer's records years after filing, an AI could theoretically analyze vast streams of anonymized financial data in real time to spot anomalies or patterns of noncompliance as they emerge. This could also lead to a more proactive approach from tax agencies. By using predictive analytics, an agency could identify industries or types of transactions where taxpayers commonly make errors, and then proactively issue clearer guidance or digital prompts to help them get it right the first time. AI could also power sophisticated chatbots and virtual assistants to answer a majority of taxpayer questions instantly, freeing up human agents to handle only the most complex and nuanced cases. Of course, the path to such a future is filled with significant challenges and important questions. How would a real-time system handle the immense complexity of the U.S. tax code, with its countless deductions, credits, and personal circumstances that are often only known at the end of a year? What are the profound privacy implications of allowing a government agency to have real-time visibility into financial transactions? The technological and societal hurdles are substantial, and these are the questions that will be at the center of the debate for years to come. In our next chapter, we will bring our focus back from the distant future to the present, exploring how the digital revolution has impacted not just the tools we use, but also our access to tax knowledge itself, through the democratization of financial information. In our exploration of the future of taxation, we touched upon systems that could reshape tax administration. Now we return to the present to examine one of the most profound, yet often overlooked, impacts of the digital revolution: the widespread access to tax knowledge. For generations, understanding the tax code was a specialized skill, with information largely confined to dense legal texts, official IRS publications, or the offices of paid professionals. The internet has fundamentally changed that dynamic, democratizing access to information and empowering individuals to become more informed about their own financial lives. This chapter provides an overview of the landscape of digital tax resources. It is for informational purposes only, intended to describe the types of content available. It should not be interpreted as an endorsement of any particular source. The quality and applicability of information online can vary, and personalized advice from a qualified professional remains the gold standard for specific tax questions. The most authoritative source of tax information has always been the Internal Revenue Service itself, and the agency's digital presence has transformed how the public interacts with its resources. The official website, irs.gov, has evolved into a massive free repository of tax knowledge. It houses a complete library of tax forms, instructions, and publications, all of which are searchable and instantly accessible. Beyond these core documents, the IRS has developed interactive tools to make information more approachable. The Interactive Tax Assistant, for example, is an online tool that asks a series of questions to help taxpayers get answers to common tax law questions, such as, am I required to file a return? Or can I claim a specific person as a dependent? The agency has also embraced modern media platforms to reach a broader audience. The IRS maintains an official YouTube channel with short, easy-to-understand videos explaining tax concepts, outlining taxpayer rights, and warning about prevalent scams. This use of new media represents a significant effort to make official tax guidance more digestible and accessible to people who may not have the time or inclination to read through lengthy publications. Beyond government sources, the private sector has become a major provider of free tax education. Tax software companies, in an effort to attract and inform potential customers, produce a vast amount of high-quality content. Their websites often feature extensive blogs with articles that break down complex topics, like the difference between a tax credit and a tax deduction, into plain English. They frequently offer free online calculators that can help estimate a tax refund or determine the appropriate amount of payroll withholding. While this content serves a marketing purpose for the companies, it also contributes to a more educated public. The digital age has also given rise to a new wave of independent financial media. Financial news websites, specialized blogs, podcasts, and video channels now offer a constant stream of commentary and explanation on tax-related issues. These platforms can be particularly effective at translating new tax legislation into understandable terms, explaining how changes in the law might impact the average person. They provide a diversity of voices and perspectives that did not exist in the pre-internet era. However, this explosion of information is a double-edged sword. While it provides unprecedented access, it also creates a significant challenge of quality control. The accuracy, objectivity, and expertise of online sources can vary dramatically. Misinformation, whether intentional or not, can spread quickly. This places a new responsibility on the individual to be a critical consumer of information. To consider the source, look for corroborating evidence, and understand that general educational content is not a substitute for advice tailored to one's unique financial situation. Ultimately, the democratization of tax information is a powerful force. It has the potential to reduce the anxiety and confusion that many people feel about taxes, enabling them to ask smarter questions and make more informed decisions. In our next chapter, we will explore how different generations, from baby boomers to Gen Z, are engaging with this new digital tax world in distinct and revealing ways. The digital transformation of the U.S. tax system is a sweeping change, but it is not experienced in the same way by everyone. A person's age, life experience, and lifelong relationship with technology create a unique lens through which they view and adopt these new tools. In this chapter, we will explore the broad generational trends and how different age groups, from baby boomers to Gen Z, are navigating the digital tax landscape. This discussion is based on general observations and market research trends for informational purposes. These are not rigid rules, as individual financial complexity and personal preference are the most important factors in any person's decisions. The goal is to understand the diverse ways Americans are adapting to financial technology. Let's begin with the baby boomer generation, who built their careers and financial lives in a world dominated by paper and face-to-face interaction. Many have long-standing relationships with a trusted CPA or tax preparer. For this group, the digital shift is often a hybrid experience. They have widely adopted tools that enhance their relationship with their professional, such as using email to ask questions or logging into a secure online portal to upload documents. However, they may be less inclined to use a fully do-it-yourself software solution, particularly given that they are often navigating the most complex financial situations, involving retirement distributions, investment portfolios, Social Security income, and estate planning. Security and privacy are often primary concerns, reinforcing a preference for trusted, established relationships. Next is Generation X, often seen as the bridge between the analog and digital worlds. They remember filing paper returns, but were also the first generation to widely use personal computers and the internet in their careers. This has made them pragmatic and adaptable technology users. A Gen X taxpayer might be perfectly comfortable using DIY software for a number of years, but as their financial lives grow more complex with mortgages, college savings for children, and executive compensation, they are often quick to recognize the value of professional expertise. They comfortably toggle between digital convenience for straightforward tasks and expert guidance for high-stakes financial decisions. Then we have millennials, who are often considered the first generation of digital natives. Having entered adulthood as cloud computing and smartphones became mainstream, they are accustomed to managing nearly every aspect of their lives through apps and online platforms. This has led to a very high adoption rate of DIY tax software. Their financial lives often reflect the modern economy, with many navigating student loan debt, gig economy side hustles, and early forays into cryptocurrency investing, scenarios that modern tax software is specifically designed to handle. They are more likely to research their options online, read peer reviews of software, and seek out educational content from digital media. Finally, there is Generation Z, the hyper-digital natives who have never known a world without the internet and smartphones. As many of them enter the workforce and file taxes for the first time, their expectations are shaped by the seamless, intuitive user experience of their favorite apps. Their tax situations are often initially simple, perhaps a single W-2 from a first job, making them the ideal users for free, mobile-first filing options. They are also the first generation to have their financial literacy significantly shaped by social media platforms, for better or worse, learning about concepts like investing and taxes from short-form videos and online influencers. Understanding these generational approaches is vital. For software developers, it highlights the need to build products that can cater to a wide range of technological comfort levels. For policymakers, it underscores the importance of ensuring that the tax system remains accessible to all, whether they prefer a mobile app, a desktop program, or a conversation with a human advisor. In our next chapter, we will examine the role of the government in this digital shift, exploring how policy and official initiatives are actively shaping the future of tax technology. The digital evolution we've been discussing is not merely a product of private sector innovation. It is also being actively guided, funded, and accelerated by government policy. The shift towards a more digital-first tax system is a conscious strategic decision, driven by a combination of taxpayer expectations, the need for governmental efficiency, and a long-term vision for tax administration. In this chapter, we will explore the key policies and government initiatives that are paving the way for a digital tax future. This overview of government policy is for educational purposes only. It is intended to describe the stated goals and functions of legislation and official programs. This content does not represent a political viewpoint or offer any legal or financial advice. A major catalyst for the current wave of modernization was the Inflation Reduction Act of 2022. This legislation provided the IRS with a significant, long-term funding commitment earmarked specifically for transforming its operations. This infusion of resources was designed to address decades of underfunding that had left the agency reliant on antiquated, often paper-based systems. The goals of this funding are twofold: dramatically improve taxpayer services and modernize enforcement capabilities. A large portion of these funds is dedicated to overhauling the agency's core information technology infrastructure, the digital backbone that supports everything from the IRS website to the processing of returns. This builds upon the foundation of earlier legislation, such as the Taxpayer First Act of 2019, which directed the IRS to develop a comprehensive customer service strategy. This act mandated a focus on reimagining the taxpayer experience, leading to enhancements in online accounts and a more citizen-centric approach to tax administration. Together, these policies represent a clear congressional directive. The IRS must modernize to meet the standards of the 21st century digital world. In response to these directives, the IRS has published a detailed strategic operating plan. This plan serves as a public roadmap for the agency's transformation. A central pillar of this plan is the move toward seamless, digital taxpayer interaction. One of the most prominent outcomes of this strategy is the establishment of the Direct File program as a permanent, free tax filing option. From a policy perspective, this is more than just a new piece of software. It represents a decision to provide a public option in the tax preparation market, with the stated goal of simplifying the filing process for millions of Americans. Another critical initiative detailed in the modernization plan is the push for paperless processing. For decades, the IRS has had to manually key in data from tens of millions of paper returns each year. A slow, expensive, and error-prone process. The agency has set an ambitious goal. By the 2025 filing season, it aims to achieve paperless processing for all tax and information returns. This means that any paper document received will be immediately scanned and converted into digital data. This single operational change is expected to cut processing times in half, speed up refunds, and free up agency resources to focus on taxpayer service. These policies all serve two interconnected goals: enhancing service and improving enforcement. By making it easier for taxpayers to file, pay, and access their own information online, the IRS aims to reduce the burden of compliance for the vast majority of Americans who want to pay what they owe. At the same time, the very same digital systems and data analytics capabilities that enable better service can also be used to identify patterns of non-compliance more effectively. The stated policy is to use this technology to focus enforcement efforts on complex areas, such as large partnerships and high-wealth individuals, where the potential for tax evasion is believed to be highest. In our next chapter, we will take a step back and look at the bigger picture, considering the broader societal impacts of this digital tax revolution on issues of equity, access, and the economy. Our journey has taken us through the tools, technologies, and policies that are reshaping the U.S. tax system. Now, in this penultimate chapter, we will take a step back to consider the bigger picture. A change this fundamental does not just affect how individuals file a return. It sends ripples throughout our society and economy, raising important questions about fairness, access, and the future of financial administration. This chapter will explore some of the broader societal impacts of the digital tax revolution. The discussion is for educational and contextual purposes, intended to highlight the ongoing conversations surrounding this technological shift.
Disclaimer: this video is for informational and educational purposes only, and should not be considered professional legal, financial, or tax advice. I am not a certified public accountant, CPA, or a tax attorney. You should consult with a qualified professional for advice tailored to your individual situation. Tax laws are complex and subject to change. The creator of this video or the channel will not be held liable for any actions taken based on the information provided.
It does not represent a particular viewpoint or offer solutions, but rather frames the key issues at play. One of the most significant promises of a digital tax system is the potential for increased equity. For low-income taxpayers, the cost of tax preparation can be a significant barrier to receiving the refunds and tax credits they are entitled to, such as the Earned Income Tax Credit. The rise of free filing options, both through the IRS Direct File Program and the Commercial Free File Alliance, lowers this barrier. By providing accessible, no-cost tools, the system can help ensure that financial circumstances do not prevent a citizen from fulfilling their obligations and receiving their benefits. Furthermore, as we've discussed, data analytics can allow the IRS to focus its enforcement efforts more precisely on complex, high-dollar non-compliance, which could foster a greater sense of fairness in the tax system as a whole. However, the move toward a digital-first system also brings the challenge of the digital divide into sharp focus. The digital divide is the gap between those who have ready access to modern technology, including reliable high-speed internet, and those who do not. This can disproportionately affect older Americans who may be less comfortable with digital tools, residents of rural areas with limited internet infrastructure, and some of the nation's lowest-income individuals who cannot afford a personal computer or a consistent internet connection. As tax administration becomes increasingly reliant on online portals and digital software, there is a risk of unintentionally making the system less accessible for these groups. Recognizing this, the IRS and numerous nonprofit organizations continue to support programs like Volunteer Income Tax Assistance, or VITA, which provide free in-person tax help to ensure that everyone has a path to filing. Beyond the individual, the digital tax revolution has significant economic and business impacts. It has spurred the growth of a vibrant and innovative financial technology, or fintech, industry. An entire ecosystem of companies, from large software corporations to small startups specializing in niche areas like crypto taxes, now employs thousands of people in high-tech jobs. For the nation's small businesses, the efficiency gains from cloud accounting, automated payroll, and sales tax software are substantial. By reducing the time and resources spent on administrative compliance, these tools free up entrepreneurs to focus on what they do best: innovating, serving customers, and growing their businesses. Finally, this transformation raises profound questions about data privacy and governance on a societal scale. The digital tax system involves the concentration of an immense volume of sensitive financial data, both in the hands of the government and with a small number of large private software companies. This creates an ongoing public policy debate about how this data should be protected and used. Questions of data ownership, the potential for misuse, and the establishment of robust, transparent safeguards are critical conversations that will continue as the technology evolves. In our final chapter, we will bring our entire journey to a close, summarizing the key themes we've explored and offering a concluding perspective on what it means to navigate this new and evolving digital tax landscape. We have arrived at the final chapter of our journey exploring the digital transformation of U.S. taxes. Over the course of this series, we have traveled from the paper-filled past to the data-driven present, and even peeked over the horizon at the possibilities of the future. Our goal has been to provide a comprehensive map of this new and evolving landscape, and in this conclusion, we will bring together the key themes of our exploration. We began by remembering the world of paper forms and manual calculations, a shared experience that highlights the sheer scale of the change we are now living through. We charted the evolution of tax software, from the first programs on a desktop computer to the intelligent, cloud-based platforms that can now be accessed from the palm of our hand. We saw how this was not just a change in tools, but a fundamental shift from a process of mere calculation to one of intelligent data analysis, powered by the growing influence of artificial intelligence. We examined the transformation of the IRS itself, from a distant, paper-based administrator into a digital service provider, offering online accounts, direct filing options, and a host of self-service tools. This reflects a new, more direct relationship between the taxpayer and the tax authority. Our journey then took us into the heart of the modern economy, exploring how digital tools have become essential for the millions of self-employed individuals in the gig economy, and for those navigating the complex, new frontier of cryptocurrency. Throughout our discussion, we have addressed the critical issues that underpin this entire digital ecosystem. We covered the paramount importance of data security and privacy in an age of constant connectivity. We observed the changing role of the tax professional, who is evolving from a data entry specialist into a strategic advisor. We looked at the profound impact these tools have on small businesses, and we considered the broader societal questions of equity and access in an increasingly digital world. Finally, we explored how government policy is actively funding and shaping this transition toward an even more automated and data-driven future. From this extensive journey, a few core themes emerge. The first is empowerment. Digital tools have given the average person an unprecedented level of access to and control over their own financial information. The second theme is efficiency. The automation of what were once slow, manual, and error-prone tasks has saved immeasurable time and resources for taxpayers, businesses, and the government alike. The third, and perhaps most important, theme is responsibility. While technology has made the process of filing taxes simpler, the underlying complexity of the tax code remains. The digital age requires a new kind of literacy, the ability to be a critical consumer of online information, to understand the importance of data security, and to recognize when a situation requires the nuanced judgment of a human professional. The tools are powerful assistants, but the ultimate responsibility for accuracy and compliance always rests with the taxpayer. The transformation we have discussed is not over. It is an ongoing process. The trends toward greater data integration, smarter analytical tools, and a more seamless digital experience will undoubtedly continue. The annual ritual of taxes has been permanently reshaped. By understanding these powerful new tools, the opportunities they create, and the questions they raise, we are all better equipped to navigate the financial world of today and tomorrow. Thank you for joining us on this journey. Remember, this series was for informational and educational purposes only and does not constitute financial, legal, or tax advice. Always consult with a qualified professional for guidance on your specific situation.
Disclaimer: this video is for informational and educational purposes only and should not be considered professional legal, financial, or tax advice. I am not a certified public accountant, CPA, or a tax attorney. You should consult with a qualified professional for advice tailored to your individual situation. Tax laws are complex and subject to change. The creator of this video or the channel will not be held liable for any actions taken based on the information provided.